Hi, this is Simon with Trade and Perform Coaching, doing the trade review for Friday, the 28th of March. Remember, the purpose of the trade review, the purpose of the tweets, of the live market preview is to help educate, right, and teach traders how to trade for themselves. This isn't a trade calling service per se. The idea is to help identify key locations where you can take a trade and then to learn from my trading style, but to take it and to make it your own. That's the purpose of coaching. I'm not trying to make little copycats out of my trading style. My trading style works for me. You've got to take the best of what I have to offer and take pieces of it and make it work for you if that's what you choose to do. But it's not a situation where you should be following me blindly. There's trades that are decent setups that I pass on quite often because I don't think I can have high enough odds at putting a very large size trade on, and I can simply afford to pass on them. There's markets that I don't necessarily enjoy trading or think that they offer me the highest odds. I occasionally pass on them. But what I do very well, and what my objective is to, when I identify the zones I want to trade in, is to put a trade on, take 2 points out of that trade as quickly as possible, move my stops down to break even, and hope a little bit the Lady Luck plays some fortune on my side, doesn't come up and tag me out, and lets me kind of trail those trades down for larger trades, right? I have my trade plan is structured so that I reduce fear, anxiety, I'm able to maintain a high level of focus, and I'm able to remain in a learning mode with the markets. Okay, so that's what my trade plan is designed to do. It does it very well for me, and it's done it very well for many of my coaching clients. And so, at any rate, that's kind of where I want to move everybody towards is an understanding of why I do what I do and how I do it. So let's get started. The first thing that I was concerned about in the morning was, as I am every morning due to the rash of open drive higher that we had, is just that, an open drive higher. This is the picture, guys, of an open drive higher. Now, they stutter stepped it, meaning it didn't come until the second candle, but when you see a bar of this size, 1846 to 1854, red light should be going off in your head. Potential trend day up. In this case, it was failed range extension, and we've had very few failures on these. Now, this is by definition, right? We gapped up, we drove higher, we continued to trend up until about 10:15, and then we traded sideways right up until lunchtime, and then we broke back to the downside, and eventually retraced the entire move. Now, let me tell you, this portion of this move has not come from open drives higher in a long time. In the last 2 weeks, we've finally had 2 or 3 where they've actually gotten somewhat weaker. And I will actually go ahead and after reviewing it and thinking about it over the weekend, I'm going to go ahead and start taking these trades as they appear. But that being said, I'm going to wait until it's my prime time to take the trade. So if you look right here, 9:30 is usually the prime time for getting reversals. Okay, and if you look, we've already spent 25 minutes in this zone. That eliminates this zone as a potential reversal area for me. Where am I looking? I'm moving my eyes to the top of this zone. Now, unfortunately, only 150 contracts had gone off at 1859.50. I was back at 1861 to 1861.50 was where the location I was looking for. It didn't occur. I didn't get my fill. That's unfortunate. That's about the 6th trade that I did not get in the past month. That's accumulated to over 30 ES points that have not gone into my trading account. But that's okay. You know, knowing that for me, that I'm getting good trade location, that I'm placing my trades in areas where it makes the market very difficult for the market to take my money from me and makes it a very high probability that I'm going to make money, that means I'm doing my job well. And I'm all right with that, right? Remember, I'm not trying to trade for the sake of trading. I'm trading to make money consistently, day in, day out, week over week, month over month, year over year. And there's very few people who can do that, right, on a professional basis, and they are also able to capture every single trade. Guys that go after every single trade that they can capture tend to have a lot of losers and a lot of winners. I try to maintain my win rate above 70%, so there's a price to pay for that. Occasionally that means that I've missed the trade. This past month has been more so than normal, but I know that I'm in good shape, and I know I'm in good standing to continue making money going forward, not just for this week or this month, but for years to come. So that being said, okay, if you'll look, we started to trend up, and we really, wow, this is really annoying the daylights out of me. We'll just get rid of that. Let's see if I can't. Okay. Right here, if you'll look, this is our trend up. That finally broke it, okay? And we never got a real retrace back up. The other thing that I had mentioned in pre-market was that this area right here, I guess I can change colors on this so it can be seen a little bit easier. This area was about halfway back from swing high to swing low and would be a good area to launch a trade reversal from. Now, how would have I liked to see us get back up to this trade area? Well, I would have liked anything but this to start off our day, quite frankly. I would have liked our day maybe perhaps to start, come in, kind of do one of these jobbers, then break out, push up through here, come here, get a rotation down, push up here, and then get a rotation down and a rejection. That's what I would have rather seen. This is an easier pattern for me to trade. This is a very hard pattern for me to step in front of because, and just because really since October and November, these open drives have been relentless to the upside, and stepping in front of them have wasted a tremendous amount of emotional capital, even if the trade worked out. It was just hard to garner the strength to step in front. If you'll recall, just last Thursday, I had a zone that I thought was a valid zone, stepped in front of it, and I took 2 stops back to back. So if I'm going to err on the side of caution, I did, and I am, right? I'm going to err on the side of not taking the trade versus getting run over. And I was willing to take the trade up here. It just didn't get to my location, and that's all right. There's no big deal about that. Continuing to look at the clues of what else happened, right? Out of the open, no gap fill, no full gap. We didn't even make an attempt at it. That was the second clue in there. Looking at NQ, right? If we look at NQ, oh, also, we cleared Globex high. That's another sign. Wow, it's just annoying the daylights out of me. This is another sign right here. We cleared Globex high. Next, if you look at NQ, okay, NQ opened. We opened below Globex high. Now, in this particular case, right, we initially had weakness. As you can see, they tried to make a push to the downside. However, gauge this push to the downside. Did we have gap fill? Nope. Did we get gap, half gap? Yep. And what did we find at half gap? Responsive buyers. And then again, within 15 minutes, NQ finally got above Globex high, and we were able to continue pushing higher. Now, there's one big dichotomy going on here that's now clear to me. It wasn't at first. I've noticed it for about a week and a half, but it's becoming bolder in terms of color, which means that we are starting to get a rotation out of the growth stocks, meaning NQ, and a push over ES stocks are becoming stronger. Now, I don't know if that was an end of the month phenomena because it took place in the last week and a half, if that's going to continue, or if that's going to theme that's going to that theme is going to maintain or not. I'll look tomorrow to see if that concept continues. How will I know? Well, NQ will start leading us right to the upside. I will now put less weight on NQ pushing lower and its ability to drag ES lower, and I will also watch when NQ starts to reverse to see if ES accelerates faster than NQ does. That's again one of the nuances of being able to trade well, is identifying who has a stronger hand. And right now, to the upside, ES has a stronger hand to the upside, NQ has a stronger hand to the downside, and we'll trade appropriately using that information. That's really valuable information when you can identify it. And the way that you identify it is keep watching the relationship. Small changes in that relationship will tip you off as to clues as to how to better trade the markets that you're trading, whether it's ES or NQ or both. What's the last piece that I wanted to say? Oh yeah, with going back to this trend day over here and the breakdown. So let's pull this up here really quick. So as I laid out pre-market, this turned out to be a fantastic area to launch a counter trade from back to the downside. Unfortunately, things didn't line up for me. I wanted to fill just behind here, and I don't think it was a matter of getting too greedy. I think we ran out of juice, and NQ was getting weaker. I'm totally happy waiting for a trade in the middle to the back of the zone if I think that's appropriate trade location. The other piece is we are getting failed range extensions, and this is by definition a failed range extension. Open drive higher, we pushed up, balanced, right, and then we broke down and retraced the entire move. That is by definition a failed range extension. We're starting to get more and more of that. I'm going to show you here real quick. Okay, so quickly going through this, what's changed here is that if we look in the months behind, Okay, we can see that for months we've had these, for the most part, open drives higher that have get hung up, and even when they've rotated, it's been way at the end of the day, right? Most of the time, it's been a consistent drive higher, like this perfect example. We drove all day. We opened up, we drove all day. Again, we opened up, we drove right into the middle of the day, then we finally rolled over at the end of the day, but it wasn't failed. Notice we didn't clear back to from where the rally had started till the following morning. If you look here, even after push down, we drove up all day, and we've been going through consistent grinding markets. There are examples where we rolled over, but they were not consistent rollovers to the downside, right? This is an example, this is an example. But if you look for much of March, drives up were sustained all day long. Rollovers were very, very brief, and for the most part they were bought with. And the easier side to trade on, is on this side right here where it pushes up. And so at any rate, this has been the first time that we've rolled over to the downside, and really I've seen a completely failed range extension. Prior to that, like I said, I was very concerned about these constant drives that we've been getting all the way through. Here's an example, February. All of February we were getting these drives up, right? Where anywhere where you shorted, okay, you just had a very hard time making any money to the downside. We had flashes where that worked, but for the most part, you were just stamping in front of a roller coaster that was running you over. And at any rate, this price action where we've been getting these consistent driving days day after day, as opposed to what we normally get, which is drive up, bounce day, then move down, or continuation higher. What we've been getting is drive after drive after drive after drive. So it's made me a little probably gun shy on the short side. That being said, when I went back and did my homework this weekend, I did notice over the past few sessions that after the initial moves, we have been getting moves lower back to the downside. Two-sided trade, right? See that? Downside, upside. This was all, even here when we got upside followed by downside. So I'm starting to see more and more of that where we're getting this two-sided trade. Again, failed range extension here, back to the downside. And so it will probably embolden me to the downside. Whereas going up until Friday, I was really pretty hesitant on an open drive higher to take a short out of that scenario for this very reason right here. Even this rotation needed to be nailed perfectly right here, and we kept going up. But I've seen enough of these break now in doing my homework where I'm probably going to take a couple shots. And again, I was willing to take a shot at it on Friday. It just didn't get up to my price point where I was looking. It tagged the zone to the tick. I don't like to be quite that perfect in my trade location, but I just happened to be on Friday. So again, remember the objectives, and I'm a little bit tired here, so I'm going to wrap it up. Remember the objectives I have when trading. Number one objective in trading, protect my physical capital, my actual account size. Number two, protect my emotional capital, right? Number three, I want to psychologically keep myself in a strong position, which means I'm not trying to jump from point to point, capture everything. I'm trying to let the market give me the best signals. And sometimes, right, the best way to do that is to sit quietly and let the market develop for you and show you what its hand is, okay? Shorting open drives has not been an extremely popular strategy because it's been losing people a lot of money, right? There's not a lot of people who've gone up, open drive higher, I'm fading it. Why? Because everyone's been getting killed who's been trying it. I am now seeing that that pattern is changing, and so I'm going to be willing to adapt my own trading style to go, okay, I can go ahead and put in some fades into this trade, and meaning the open drive higher between really probably 10:30 a.m. and 11:30 a.m. Perhaps use trap trades below the first hour high to set those trades up and make a little bit of money to the downside if it's possible. Really, I think that's the biggest lesson here. You know, it looks like this behavior that we've gotten right here has stopped, okay? And we're getting more and more of this behavior right here, and we're going to have more and more of this behavior here, which is great. It's a fantastic way to make money we'll see what the market does for us on Monday. And at any rate, my name is Simon with Trade and Perform Coaching, and I'm certainly looking forward to seeing. The first thing I'm going to look for on Monday is to see whether NQ continues its weakness and ES is becoming the new leader, or if NQ is going to reassert itself. Also, I'll be looking to see if there's weakness in both ES and NQ, but generally speaking, markets don't crash. They tend to just simply rotate money from one sector to another sector, which is cool. That presents opportunities as well. So anyways, my name is Simon. I'm with Trade and Perform Coaching. You can hit me at tradeandperform@gmail.com. I hope everyone's having a great weekend. I'm going to go and relax. Talk to you later, guys.